Charles Shi of Needham. Charles, thanks for being with us this morning. Lay out the case for our audience. Why are you bullish on this name, given this is a weak time cyclically for chips, and many would argue that the geopolitical risk is rising?
Yes, I think this is basically a stock call, but also a call on the company fundamentals. Well, you already, let me get to the number two first. You already mentioned that, well, I'm expecting Taiwan Semi to grow roughly 10% on the top line next year, despite that we are entering a semiconductor downturn into 2023. I would say when we look at downturn, we must look at the unit growth rate. And Taiwan Semi, I do expect that the unit shipment going to go down by roughly 10% next year. That is going to, we're going to see a cliff in Q1 23. But at the same time, I would say the pricing growth coming from Taiwan Semi is going to more than offset the unit growth declines into next year. When I say pricing growth, I'm not talking about they raise price across the board. Well, that's part of the equation, but the greater part of that is there's a mix of a Taiwan Semi product shift to the more advanced 5 nanometer and the 3 nanometer node into next year. You probably heard all those companies, AMD, NVIDIA, Qualcomm, they are cutting back, but they are not slowing down their migration into the more advanced 5 nanometer node. Apple is going to move to the 3 nanometer node next year. All those migrations to the better technology does not slow down in a downturn. And those technology provides better value. Taiwan Semi charges higher price. Our estimate is the pricing 5 nanometer is 50% higher than 7, and the 3 nanometer is probably 20% higher than 5. So that is the structural pricing increase there, and it's probably, I would say it's the value they're providing is greater next year.
Okay, so you're saying that it's still going to be capturing that secular shift, especially into high-performance chips. Charles, though, speak to that geopolitical risk and what's happening as well as manufacturing comes online here in the U.S., if you believe that really is going to happen. Does that premium come down for Taiwan Semi?
Well, I think the reshoring is going to take a few years. It's not going to happen overnight. Just going to flip a switch and everything is going to kind of build up in the U.S. It typically takes 2 years for every company to really build a capacity in any new geography. I would say Taiwan Semi, I think that the structure driver is really where they have the position they have in the industry at 5 nanometer, 3 nanometer. Just because the reshoring is happening, their dominant share position at those more advanced and process technology, it's not going to change overnight. It's probably going to take a few years down the road for that to change. Maybe I didn't quite get to that when I answered your first question. This is also a stock call. I think one thing I think investors, including myself, I'm always amazed that the stocks typically bottom ahead of fundamentals. We know Taiwan Semi is going to have a cliff in terms of revenue in Q1, but the stock should bottom well ahead of that. And same for the whole industry. Okay. Thank you.
So when you look at the economic potential impacts of both a global recession and the geopolitical risks, right, that Taiwan potentially faces, are you factoring all of that into this, or does that kind of provide more fuel for a bear case?
The thing, let me address the geopolitics risk first. I'm not really a macro analyst or geopolitical analyst, but I would say from a stock perspective, the geopolitical risk that the headlines are going to do is probably going to dampen the multiple expansion of Taiwan Semi. They are trading at I would say the low end of almost at the all-time low in terms of the PE multiple right now. Geopolitical headlines may dampen the multiple expansion when we get to the upcycle, but the company is going to grow 15 to 20% CAGR over the next few years. That's after affecting that the next year they're going to grow below that long-term CAGR. I would say the upside driven by the EPS growth is probably good enough